Hi everybody, my name is François. Hope that you're doing very well. I really happy to find you through this video to give you my answer in this question, this terrific question, as how we are beginning on the bear market, or are we already in bear market, right? So before to starting my point of view, I kindly recommend you to subscribe to this page as the Facebook page, which is François Abli or Global Street Trader Academie GSTA, and also to also subscribe to the YouTube channel, which is GST as well, and also to follow me through the pseudo, which is Frank Belfort at TradingView. Okay, so this question is awesome, right? And I cannot say by yes or no. I can say that technically we probably starting, or we could be in bear markets, right? But fundamentally we are not in bear market. So here is why. When you take a look on this free charts here, as you see the S&P 500 at the weekly, the Nasdaq at the weekly too, and also my kind of sectorial, average sectorial of the, like, it's a basket of the biggest stock exchange markets, as the Chinese 50. I put the S&P 500. I put also the Nikkei 225. I put also the Eurostock 50, and also the MSCI, which is close to the I think 25 emergent the emerging markets, right? The MSCI. So all of these free economic indicators just must show us if we are in beginning or bear market or not, right? And we clearly see here that in terms of the S&P 500, we are like a crucial level, which is the EMA, which is exponential moving average 52. So in terms of the weekly period, is representing like the annual moving average in exponential, because we know that in 1 year we have 52 weekly period. So we clearly see that we break that, right? I can zoom on it. We break this moving average. So it's just left 5 days, and we will be after the end of the October, and we will be starting a new month, which is November, right? And usually between October and November until December, or probably the beginning of the new year, we expecting some, like that we call a rally of the stock exchange market. But at this year, we're not sure of that, right? Because we clearly break this 52 weekly moving average, which is like the annual moving average. And if we close below this white EMA, we're probably getting into a new cycle of the bearish markets, a correction. But we didn't not talk about like a recession or the pre-recession, right? Because most of official and economists and analysts and Nobel pricing, they all agree that we are not on inverted yield curve. Like remember what I talked to you already about this instrument, that this instrument of the monetary policy that I already described to the previous video. We will talk about like the recession as if we are getting into the inverted yield curve, but at that time we're not in the yield curve, like the inverted yield curve. We'll be probably in the next summer at a flattening yield curve. So just to make a quick recall, I will let you know about like what is the yield curve, because we have a 4-step based on the economic cyclical. We have 4-step on like the flattening yield curve. First step, we have we have this one. So we have that. So I'm just like illustrating quickly, and we have this, you know, we have this curve, right? Let me adjust that, right? So we have this curve, which is like when the economy is on the expansion, is on the growth. We have inflation, we have like a good consumption for like the people, and the economic, like, you know, feel great, right? After that, you see here kind of stationary point, right? And that's why we call, at the second step, we have that we call the flattening yield curve. Flattening yield curve, that will be probably in the next summer, right? The next summer probably, like according that most of economists and analysts says, yield curve is kind of flat. Yield curve is when we got some like a deceleration of the rhythm of the growth of the economy, and kind of like stabilization, right? So nobody, like that means said that the economy not like moving as we expecting. It's just like stay on the flat, exactly. So we will have those kind of, you know, a curve. So it's flat, right? The economy is not on the top, is not on the bottom, is not on the inverted. It's just flat. So we could have a big correction on the market upcoming, or we can have also a big, like, you know, bull run. But at the end of the year, we will probably see that the market will be just, you know, recover at the same place as we started. It's a kind of biggest doji on the market, because it is not going up, not closing up, and not closing down, just closing on the when he started, right? So that's why we call it the flattening yield curve. This is the second step on the economic cycle, right? After that, we will have a third step, which is the kind of rounding, you know, yield curve, like kind of, you know, it's starting at the on the left, is going up, is just flattening, and after is decrease on the market. So this is three step, which is like announced principally the pre-recession, right? The pre-recession, where people starting to feel that the economy is getting slowly, and we don't have like the massive investment that we expecting for boosting the economy, right? And after this third step, which is expecting in 2020, we will have probably the inverted yield curve, where it's kind of illustration between the short-term yield curve versus the long-term yield curve, where people have not confidence to borrow money in an economy to the long term. They prefer just give some like short-term credit, right? And this is the fourth step, the fourth step of the economy there. This one, you know, meaning that we are in recession, right? But this is like the truth of like a federal monetary policy, right? In the macroeconomic, you know, macroeconomic activity. But all that you can illustrating at your chart is to take the S&P 500. You know, don't forget that at the 2000, you know, at the 2008, like at the recent, the previous you know, the previous financial banking crisis, the economy, the collapse starting to the look at the October, right? We break this we break here at the June. We break at June the moving average annual, and we were below that until, you know, until 2009, right? And when we break it at the June until the September, nobody talked about that we were in a financial and banking crisis. They expecting that we will have also a bull run, right? And this is the again 52 moving average annual. So I can change that to put, like, let's say the 250 moving average, which is the most follow moving average for banks and institutional trading. And we clearly see that he very like very flattening the economy, the economic indicator, which is the S&P 500. And we see that clearly that at June and at May and June, like at the beginning of the spring, we break this moving average, right? And we starting to correct. We're getting into the bear market right there. After we got some like a recover, and then we collapse again until February 2009. We were on the low here, right? But at that time here, like either economists, either specialists or financial market, nobody talked about that we were in recession. Is when we were there at the February and January, there people talk about the recession and financial banking. So don't be fooled at that time that we probably also starting to getting into the financial crisis we were just, we were just like waiting about the potential closing at this month, because we just 5 days left. After that, we will see if the market closed below the below this moving average annual at the weekly, like the 52, and then we can starting to put some strategy to be bearish on all the major indices, right? And also very careful with that. When I said that we were going into flattening yield curve in the next summer, according to the analysts and economics, they're not being said that you have to be still bullish on the market. No, that means said that for hedge fund manager, they all aware that they have not to be exposed to be on long on financial market, because the market is just like stabilized, like immobilization, and is just like flattening. We can observe some like a deceleration of the rhythm or the growth. So that being said, we could have like a massive sell-off into intraday, as we already saw, and we can also have kind of a quick recover for 200 or 300 point in the day. But at the end of the year, it's just like kind of doji. We just like starting there, we're going on the low, we're going on the top, and then we just like closing at the same level as we started, right? So very careful with that. But otherwise, you have to be after the end of the after the end of the close. If you close below this moving average, you have to be bearish, right? Just short like each highest points that we make during the day, just short it, right? It's preferable to be bearish through this period than to be bullish, right? To not be exposed on the long position. I can also show you another arguments on the my economic indicator that I built, which is I call him a WIDA, the WIDA 16775. So WIDA is essentially all the economic aggregate and macroeconomic indicators, which is composed the S&P 500, the Nikkei 225, the also the Eurostock 50. So all of major and biggest place of markets on the economy, I put all of them, and I doing some like an average of these 5 biggest economic indicators. So we clearly see with this same moving average on the 50 is a kind of equivalent of the Bloomberg world capitalization, right? So we clearly see that we are below that. We are below the moving average, and it's just 5 days left. So at least if we recover all of this level and we close on like above on this moving average, then I can say, okay, we probably reinforce the potential long movement upcoming to the next period, right? but it doesn't affect the fact that we talk about the yield curve or the flattening yield curve, right? Because this is just aside the macroeconomic and tools of policy of the Fed. But if we close below that, that being said, that we probably getting into a new cycle of bear market, then we can lose probably 35 to 40% on the financial market. So essentially, you can clearly see here that we break, this. We break here this support, right? We clearly break this support. We break this annual moving average, which is the pre-signal of bear market. So if we break it, if we close below this this level here, it's just prepare to short the market, then to be exposed on the long movement, as essentially as I said. So to finish this, my point of view in terms of conclusion, that's why I said technically we're starting to getting into the bear markets, right? But fundamentally we are not. Fundamentally, I explained to you already the 4 step on the monetary policy, and we're getting prepared to going until the second step of the evolution of the cycle of the economy, which is the flattening yield curve, before to have the rounding, and after to inverted yield curve, which is meaning the recession, right? So after that, technically, I recommend you to follow your long-term charts, because as each candles of the long-term chart, it's just like including all the impacts for intraday macroeconomic policy, because you know that in a real economy, all the macroeconomic impact still remain unchanged in terms of the economy's cyclical, right? So that's why I recommend you to start with this long-term charts, and then follow the movement or any movement which is announce the potential bear markets for upcoming. And then if we close again below this moving average for 252 period, then you can starting to short each highest point that we made into the intraday, right? So that's all that I would like to talk to you. I thought that you probably love it, my intervention, and it's the case, just feel free to put a massive thumbs up for encouraging me to follow the content. And also don't forget to subscribe through my my page, YouTube channel, GST Academy, so Global Street Trader Academy, or also follow me on Twitter as the Frank Belfort, as related to the trading view. Again, at the same Frank Belfort, français, or GST, you will see the banner, and also to subscribe to my Facebook page. So thank you so much for watching this video. It was François Ablé. I see you around for the next video. Bye bye.